All right, back to work. Break time's over. Wednesday is right around the corner. It's Tuesday evening. We're getting ready for Wednesday, not just any Wednesday. FOMC coming tomorrow. Got a lot of great trades setting up on our radar for Wednesday's trading session. You know me. I'm going to cover all my favorite setups so you get a game plan to make some money tomorrow. And as always, before we jump in and cover all the details, got a lot we're going to cover tonight. Before we jump in, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready to make some money on Fed Day. FOMC Wednesday coming right around the corner. Where are the best trades setting up here for tomorrow? Well, everything pretty much took a nosedive this afternoon, right? Everything pretty much bearish going into the closing bell here today. And obviously, we're expecting for bears to be coming in and looking for shorts up around some of these key levels of resistance. So we definitely have some shorts on our radar right now, but I'll tell you right now, we've got some rotation off the low, potentially rotation off the low. These are situations that oftentimes result in big reversals, big short squeezes, and I'll tell you, tomorrow could be a very, very busy beginning of the session tomorrow ahead of that FOMC announcement tomorrow afternoon. So I could definitely see some reversal setups tonight. I can see some shorts right on the pullbacks here tonight. So got a lot we're going to cover in this video here this evening. I'm going to lay it all out so you guys know exactly where the best entries and exits will be for Wednesday. Before we jump in though, as always, let's make sure we all get on the same page because tomorrow is not your average hump day. We have quite a bit going on tomorrow. We have, of course, early morning news at 8:30 Eastern Time, the durable goods orders and international trade number. That will get us going tomorrow at 8:30 Eastern Time. Later on in the morning, we have the petroleum status report, that 10:30 oil report that'll only affect oil. And then drum roll, please. We got everyone's waiting on that FOMC announcement tomorrow afternoon. Again, as we mentioned last night, this is the big news of the week, right? With the exception of GDP on Thursday and personal income on Friday, this FOMC announcement is the headline number of the week. Really, at this point, the question is not whether or not they're going to raise rates. The question is whether they're going to raise rates 0.5%, 0.75%, and there's some rumors for a full percentage point, but we've heard for weeks and weeks now that people are pretty comfortable between that 50 and 75 basis point rate hike. So we're expecting a rate hike tomorrow. I think the most important factor of that news tomorrow, though, is first of all, we want to make our money early in the day tomorrow and save our bullets. I know it's tempting to trade the volatility around that FOMC announcement. But what I always tell my students, and I try to convince myself every Wednesday FOMC day, is don't go forcing trades around that violent reaction on Wednesday afternoon around that FOMC announcement. Save your bullets, right? So make your money in the morning tomorrow. Save your bullets in the afternoon because we got a big GDP number, right? Potentially recessionary triggering GDP number coming out on Thursday. Remember, Thursday is Reaction Thursday, the day after that FOMC announcement. So my game plan for tomorrow is get to my desk early, make our money early tomorrow morning, right? 11:30, 12 o'clock, 12:30 Eastern Time is usually the cutoff for us. And then we'll kind of, obviously we'll watch the fireworks, get a comfortable chair, watch the fireworks on the FOMC, save the bullets in the afternoon and come back and trade those bullets, right? Use those bullets the following day on Thursday, right? So headline number for tomorrow is the FOMC announcement. We do have some more earnings coming out. It is the third week of earnings here right now. We heard this afternoon from Alphabet and Microsoft and Chipotle and right all kinds of businesses or corporations reporting here after the close. Tomorrow there's not as much potential market moving stuff tomorrow morning. I would say Boeing has potential to move the E-mini, the S&P around. That's probably the only one, Shopify and Spotify maybe for the NASDAQ, but not as dramatic as we saw this morning, right? Not as dramatic as the big names that we saw this morning. Tomorrow afternoon, though, is when we start seeing some more big names, things like Facebook, Ford, right? Some big names coming tomorrow afternoon after the FOMC announcement comes out. So I don't anticipate earnings to be that big of a drama here tomorrow morning before the open, but like I mentioned last night, Earnings are part of the equation right now, and they definitely have kind of a variable that we can't exactly anticipate here until we see it tomorrow. So the rule of thumb tomorrow is get there early, get out of there early with some money in your pocket, save your bullets for the FOMC announcement, and we'll come back and we'll spend those bullets on Thursday for what could be one of the best days of the week, that reaction Thursday here on the 28th. All right, that's the basic game plan for the FOMC announcement. Early in, early out. Don't force those trades late in the day tomorrow. We'll talk about that again tomorrow morning in our trade room. Now, guys, whether you trade one of these markets or all of these markets, make sure you watch all the way to the end because you'll learn something new throughout the entire video tonight. I'll provide different trade variations, different advanced setups as we go deeper into this video. I always try to save the best stuff all the way to the end, so don't miss the ending of tonight's lesson. Let's go NASDAQ, S&P, and then crude oil, starting off here on the NQ or the micro NASDAQ or the QQQs, whatever your pleasure is with the NASDAQ. Real quickly, though, you'll notice 4,000 tick chart in the upper left-hand corner. You can find all the time frames I'm using in the upper left-hand corner, and I show you guys how to use these charts in a lot more detail as part of our free trading classes here at School of Trade. There are three real key insights on this NASDAQ right now that are giving me the roadmap to make some money on this stuff here tomorrow. The first one is one of the most important clues because we had this very strong move down, kind of this grindy, strong move down here. Anytime we see a strong move in one direction, we expect to get a pullback and a retest of that level. This is why I always tell my students, if you see a strong move higher and we haven't pulled back and retested that high yet, focus on the long side, right? Same thing the downside. If we see a strong move down and we pull back, focus on the short side until we retest that low. Once we retest that low, then we can look for either reversals or look for new ranges developing here. And that's exactly pretty much what we're getting here. So the big reason why this is important for me, that strong move down, is because now the sellers basically got what they wanted. The sellers had mission accomplished. Strong move down, the bears got their pullback, and they sold it. In fact, you could easily argue they did it again. You could easily argue they took it lower, pulled it back, and sold it again, right? So that's a really big part of this because now, as we now bounce off that low now, with the sellers now have kind of completing their objective at that point now it's a matter of, do the bears come in and sell it again above some of these prior highs? Or do the bulls get that short squeeze I mentioned earlier where we break down those bears and wind up getting that big reversal? This is a really big part of the equation. Anytime we see a strong move in one direction, we expect a retest of that low. Then we look for more information. Now, some more really important clues here. We have obviously a bear market here into a trading range. Now, ranges act like magnets, but most importantly, these next two clues here is that most importantly, this range, you'll notice what's happened is we've rotated inside the range, we've run below the range, and now we're, as I call it, rotating off the low of that trading range. Now, a lot of times you'll have bears come in and they'll sell it, right? They'll sell it right back down in, right? And that's where bears will be looking for shorts here for tomorrow. But a lot of times, as we talked about last night on the video, as that momentum turns off of that low, again, these are very common scenarios where we produce a short squeeze or what I call a slingshot reversal in the opposite direction. So that's a really big clue. And so when you put these all together here right now, when you realize that, yeah, the bears have control, but they've already got their retest. And the bears have control, but they're letting the buyers now rotate off of that low here. So there's a lot of buy side trades here, a lot of sell side trades here as well. So if I want to be a buyer right now, right, buyers have all this opportunity right now to grab this above these highs and squeeze this thing going higher. Could be some really great reversals going higher here. Buyers can also buy off support levels below the range because we know ranges are magnets, right? So buyers are looking for those double bottom reversals, right? Buyers are looking for that reversal, that kind of slingshot reversal going higher. How about sellers? Sellers, of course, they can sell off these levels of resistance and they can sell breakouts going lower below that trading range. So strong, obviously, right, trapping in some buyers up here and then trading those breakouts as we go lower. So what's the game plan? How would I sell this market right now? What's the best way to short this thing? Well, it's a range. And so we always try to find levels of resistance above the range. You know, things like trend lines overhead, things like prior swings overhead, things like pendulum swing from below the range and above the range. There's no shortage of resistance here, that's for sure. It's a great place to get short in a bear market into a trading range. The challenge, though, at this point is that momentum coming off of that low. That momentum tells me we've got to respect those bulls and give them kind of the benefit of the doubt. So the best way for me to want to sell this market right now is to anticipate that buyers are going to be trying to squeeze this thing, right? They're trying to rip this thing basically out of control of the bears and back up into those ranges above us. And so we have to anticipate those buyers are going to try a couple times. I'll let them try once. I'll let them try twice. Once those buyers now commit, now I have one of the best edges you can get, one of the best advantages you can get as a trader. If I can sell when the buyers are stuck long, their stops now become easy pickings, right? They're great. It's a great fuel. It's a great catalyst for that move going back down again. What I like to do is I like to look for that nice strong signal candle, right? And then sell right into those stop losses. And then remember, once you grab that short off the top now, the bears have one thing on their mind. They want to take out that low. So as the market now rolls lower, your job ain't over yet. Now we draw a new trend line off those lows. We mark up a channel off of that high. We look left, we find some prior swings, and we look for things like traps or failures or pullbacks right off the top of that channel. I call these two try failures into first test is the best test, right? That could be a trap off the high of that channel. It could be a failure pattern. It could be a pullback pattern. I'll take some profit off at the low of that range and then leave that runner, right? Leave that runner back at that low. Now, guys, I know most of you all have already taken our free trading classes. You've learned things like these. You've learned things like these two try failures. You've learned that first test entry, the traps, the failures, the pullbacks. But listen, if you're one of the few people right now watching this who haven't taken that free trading class yet, if you're like me and you hate missing the best trades each day or you're taking too many losses, I'm going to put a link up here for you for our free trading course. If you're trying to transition between working full-time and trading full-time, I'll tell you right now, you're only one trade away from changing your life with the strategy I teach in that free trading course. I'll put a little pop-up there for you in the upper right-hand corner. Grab that pop-up, take the free class. You'll learn all my favorite entry setups, right? Things like two try failures and that first test trap. You'll see hundreds of examples of them. Make it easy for you to implement that stuff and start making money on your own account. So grab that link that popped up there in the upper right-hand corner and grab that free trading class. That's how we're gonna sell it back down, right? That's how we're gonna sell it on the way back down here. Now, how do we buy it as it goes higher here? What's the best way to do this? Well, really, we have quite a few options when it comes to getting long. The most common one in a short squeeze situation is a pop and a grind. Pop and grinds are very common because what happens is the other side of the market simply walks away, and that allows this thing to grind. It's very common for a short squeeze. When that happens, what you want to do is when it pops up and begins to grind higher like this, I'm going to draw a trend line off those highs. I'm going to bring that trend line down to those major swings and repeat after me. First test is the best test. I want to get below some prior swings. Those are my favorite spots to get long in these. But again, below prior swings give us traps. Below the moving average will give me a potential failure as those bears try to sell back down again. And then, of course, I can look for failures. I can look for pullbacks. Again, all the same setups you'll learn in that free course that I mentioned earlier, right? So pop and grind going higher. Bulls take control. We're grabbing that first test of that channel. And where do we think the market might want to go if this thing really reverses here as we go higher? Well, we still have those ranges back above us here overhead, right? So we've got those 12,320, 12,380 area up there. At the very least, though, you would think they would take out some of these prior lows here pretty easily there as we go into the FOMC tomorrow afternoon. There may also be a pullback right now. Let's say, for example, we don't get that pop and grind. Let's say, for example, that we end up pulling back and the buyers hold and they jump, right? And they take this thing higher. At that point right now, if we get a 1, a 2, and a 3 reversal pattern, right? A little bit different than the pop and grind, right? It's a strong pop up, but they hold the pullback, right? The buyers don't simply try once, try twice, and fail. No, the buyers hold that pullback now. Now we have a 1, 2, 3 reversal, 1, 2, 3. That strong jump off the moving average gives the buyers control. And now what I can do is I can go out, find a new channel, because channels are best in trending markets. You'll learn all about that stuff in that video class I mentioned earlier. And of course, I can go out, find that channel off the highs, and then bring it down off that low, pop it right on that low. And again, I always go out, look for prior swings, try to get under prior swings for things like traps, things like failures, and pullback combinations, right, as we go higher. A good rule of thumb, just so you know, on these 1, 2, 3 reversals, if I see a 1, 2, 3 reversal pattern going higher here, and I find my channel and I grab my entry setup off the low of that channel, a good rule of thumb is the first leg and the third leg are oftentimes very symmetrical, right? So first leg, that pop up. The second leg is usually kind of the oddball. It's oftentimes a little bit bigger, a little bit smaller. So I always say measure off that first leg. Once you know the size of that first leg, then you'll know roughly how big that third leg will be. And that'll give you a good idea of where that final target is. One last reversal pattern, then we'll go and talk about the move lower here, is if we do end up popping higher. Right? Let's say this thing just jumps and runs higher here right now. These are scenarios where, remember, anytime we have a strong move in one direction, strong move, shallow pullback, higher high in price, traps. Another of my favorite reversals, breakout patterns, if you want to call this one right here. It's a strong move. It is a shallow pullback, right? The shallow pullback is ultimately what does it, because it doesn't allow people to buy the pullback, right? The fib traders aren't getting in. It's not giving you that pullback. That higher high, right? The higher high basically confirms it's not just a pop and a drop back down again, right? That gives you that trap low now. We call these 2-try traps, right? Because it may end up going higher here and then pulling back 1, 2, right? And then back down to retest the low, like we talked about in the original scenario of selling off of that low. So that's how I'm looking to trade the short as it goes higher. That's also looking to trade the long side here as it goes higher as well. If we get that nice short squeeze off of that low. Now, here's the next question. As we go lower, how do I buy it off of that low? Or even more so, how do I trade the breakout going lower? That's a really good question. Let's grab the S&P, because the S&P, of course, is very similar here to the NASDAQ. So let's talk about that, right? Same thing we'll talk about on the S&P will apply to the NASDAQ as well. As we look at the S&P here, we have a lot of the same scenarios. In fact, the S&P, I think, is even more suggestive right now of potential short squeeze. So real quickly here, there are 3 basic key insights here on this chart right now. One, again, is that strong move down, right? They're going to want to retest that low, and they did that already. So now at this point now, whenever we see a strong move in one direction, they come back, they retest that low now. Now we have to assume that sellers are going to come in above that prior high, and their job now is to defend this area. The bears will want to come in, and they'll want to sell it back down again. Again, though, if these bears, if they're not strong enough right there, it will break through and you'll get that short squeeze, right? You'll get that reversal. And of course, you can see that big, juicy trading range acting like a price magnet, waiting above us there at 39.50, 39.60, 39.64, if you will, right? So we have that strong move been retested. Now we wait and see what the bears are capable of here above some of these highs. This is the same thing as the NASDAQ, right? Next thing here is that bear range with rotation off the low, right? Same thing as the NQ again. I don't mean to repeat myself too much here, but it's important that we get familiar with the situation that we know we're up against here when the opening bell rings. So bear market into a trading range. You'll notice we rotate up, we rotate down, and now we're rotating back higher. The amount below the range, the amount above the range creates lots of resistance. That's why I said earlier, it's a great place to get short. It's a great place to sell short. You're at resistance in a bear market above a darn trading range. Great place to get short. But you'll also notice too, there's a rising support trend line here. And that rising support trend line really makes it difficult for us here right now to want to be selling right into that rising support. We did not have that, you'll notice, on the NASDAQ, right? The NASDAQ made some lower lows here. There's no rising support for us to worry about. There is, though, on the S&P. That's why I say this one is even more suggestive that a short squeeze is more likely on the S&P, and maybe and it may drag this this NASDAQ up along with us here. So a lot of this is very, very similar. We definitely have potential for that short squeeze, right? Buyers would love to buy that squeeze going higher. Buyers would love to buy that reversal off of that low, which we'll cover in more detail here in a second. Sellers, how are the sellers going to sell this thing right now? Because again, on the NASDAQ, we didn't have this problem. On the NASDAQ, we talked about how we'd go up, we'd go 1, 2, and sell it back down again. What to do now is we have to get around this trend line. We basically have to incorporate that 2-try failure because, again, that rotation off the low has a lot of momentum now for the bulls. So we got that trend line coming up. And now we ultimately have to combine that 2-try failure with that trend line. Not that easy, right? Not that easy. Is it impossible? Certainly not, right? Certainly not. Oftentimes what happens is we'll see the 1, the 2, they'll break it down and we'll end up popping back up and getting that short off of that trend line as we go lower. Again, this is a bear market still. The bears are still very much in control of this. However, what we're seeing tonight is very suggestive of, again, what could be leading into a short squeeze here for tomorrow, right? So keep that on your, it's one kind of small variable here or variation that's different between the S&P and the NASDAQ. I still really like that pop and that grind channel going higher. I like that pop and that grind channel. Find those traps, find those failures, find those pullback combinations. I like that. I like that pop and grind channel option. Remember, first leg, third leg will give you an idea of how big that target will be. And this one, again, this one's a little bit easier here in the S&P because we have that big range right back ahead of us here, right? That 39.63 is last week's closing price. And so, of course, that'll be a big target there for those buyers if they can squeeze this thing back up into that trading range. And obviously, again, a 1, 2, 3 reversal, that same 3-legged move we talked about earlier, find that channel and then buy that first test off that channel. That is definitely in play here still. And that strong move, shallow pullback, higher high in price. Again, these are all the same setups we talk about on the NASDAQ. Those are all very much still in play. So get to the point now here, Joe. As we go back down to those lows, how do I buy off that low now? How do I sell it with a breakout going lower here? Buying off the low is going to be the easier part, right? Because again, you get a range below us. And basically my job in a bear market, my job in a range-bound market is to find levels of support and resistance that are just outside that trading range. So for example, if I draw a trend line down off these lows, right, that makes for a great support level back up into that trading range, right? If I find that resistance level for a pendulum swing, these are examples of levels of support and resistance that you're going to learn these, by the way, inside that free course I mentioned earlier in the video here tonight. So as we go lower, great spot to be a buyer down here. We're at a support level, right? In fact, lots of support below a trading range. What's the problem though? The problem is momentum. Momentum is all bearish right now. So we have to get, well, as we always say, there are 3 rules to trading a reversal. 1, it must be at a major turning point, right? Like a support level below a trading range. 2, we have to see signs of exhaustion. And my definition of a sign of exhaustion is using that 2-try rule, right? Just like we said earlier, let the other side of the market try twice. Once they try twice, now we know we have a catalyst. And that is the 3rd rule of a reversal. What's the catalyst? Stop losses. The easiest money you're ever going to make in a range market is trapping in those bears, selling into support with a range magnet above us and using those stops as fuel. Okay, so 3 rules to it. Major turning point, signs of exhaustion, and a catalyst. Target buying now into those stops. A 2-try failure, and then just like we talked about the short off the high, we can then grab that new channel as we go higher, find that new channel, and then drill down and we'll find the entry. This is, of course, a very slow time frame, right? This is a 8,000 tick chart right now on the S&P, right? We're not trading off an 8,000 tick chart. You'll learn the time frames that we use in that free class I mentioned earlier. 2-try failure, and then whichever one I get, right? Could be a trap, could be a failure, could be a pullback combo off of that channel now. And then where's the market trying to go? It wants to go back and take out the other side of that trading range. Okay, this is a really nice long trade tomorrow off of that low. Just remember though, wait for a test of support, wait for the 2 tries to signal signs of exhaustion, and then hit those stops and punch it higher from there. Now, if we do end up rolling down off this high and taking out these lows, that's a lot of bearish momentum. So at this point now, do we take out that low? Do we hold the pullback? And do we blast off the moving average, right? We call these 1, 2, 3 breakouts. Just like if we go up, we hold the pullback there and blast going higher. That is a 1, 2, 3 breakout, right? And a pretty enticing one, I might add at that because of the short squeeze potential of it. But if we take out that low, again, the bears will come in. If they struggle here a couple times, we'll buy it back up. But if they can hold that pullback and if they can really blast off of that low, real strong blast off that moving average, that 1, 2, 3 breakout, in this case, we're going to mark off that low. We're going to mark off that high. We're going to drill down, find our prior swings. I like to get that first test when it's right just above a little prior swing there, little trap, little failure setup off the moving average, and a pullback combo. Now, where do we think the market wants to go if they break out and go lower here? We have a ton, look at that open space, a ton of open space there below us. So what you want to do is you want to think about now as we go lower, right? As we go lower and those bears come in and blast it, it's that, remember, it's that first leg. It's technically, it's the breakout leg that is the measuring leg when it comes to a range breakout. So again, we find that breakout leg, we find our channel, right? And we're going to be able to use that breakout leg, right? We'll find our entries off the high of that channel. But again, it's that breakout leg, okay? Whenever we see a range breakout, it's that breakout leg, which is usually the first leg, right? First leg equals third leg. So breakout leg, right, becomes the measuring leg. And that will give us some fine tuning there, you know, as we go. The same thing applies too, right? If we take out that low, begin to grind down, you know, it is the last week of July right now. So it wouldn't surprise if we see another kind of pop and grind. You know, for example, right, we saw a great example of pop and grind today as we went lower, right? We kind of pop down, we grind down, right, off of those lows. What do? You mark off those lows, you find those highs, right? You mark up some of those prior swings, and you grab that first test. This is exactly the situation that you're looking for if we break down going lower. It's just a pop and grind channel, right? You can see they grab those traps above those highs. Very, very common scenario. So we break down, and now we keep on grinding and grinding and grinding down, right? At that point now, right, when they grind down like that, we go draw that trend line down, find those prior swings, right? And again, we don't know which one we're going to use here. Get up above the prior swings and grab that, right? Grab that first test off the high of that channel. First leg, right? Breakout leg. Third leg, that's your measuring leg. pretty, again, pretty simple idea there. I'm not a big fan of that strong move, that shallow pullback, and that lower low. I'm not a fan of that right here because there's too much support levels here below that trading range, right? I am a fan of that setup though, going higher, right? Because at that point, it'll be a short squeeze situation and there's a lot more potential for it to snap and keep going. So just really wait for that 1, 2, 3 breakdown, or wait for that pop and grind breakdown. Those will be your two key components here for the breakouts going lower. And again, this is the S&P 500. You can definitely apply that to the NASDAQ as well. In fact, you could easily say the NASDAQ probably has even more potential going lower because there's open space down there before we go back to that 12,000, right? That 12,000 big round number. So definitely having some breakout potentials going lower here on the Emini and the NASDAQ. How about some oil? We've covered the bases now on the S&P and the NASDAQ. We know how to buy it. We know how to sell it. Now we need to wrap things up here on the black gold, the Texas tea, the crude oil futures. Now, of course, oil, there's not a lot on this chart right now. It was a relatively quiet kind of afternoon on oil. What's the most important factors here? What are the key insights on this chart right now? Well, we get a strong move down. That was a pretty strong move. And sure enough, there's one of those strong moves, shallow pullback, lower low in price, traps, baby, always, right? Traps, baby. And sure enough, you see how it's drawn? You draw that trend line off those lows. You anchor it up around those highs. That's the first test, is the best test, right? See how that's the first test of that channel. Are you surprised that that thing went back lower again? Absolutely not, right? Absolutely not. Very, very common trade that we see in our trade room. So we know we have a strong move down. We know that anytime we see a strong move, they're going to want to retest that. Yes, and they got that retested low. What do we always say? Mission accomplished. Now, at this point, the bears have to defend that high, right? We now know that bears will come in and they'll want to sell it back above that high, right? And basically take price back down again. Okay, we also know if those bears, if they can't hold it and the market pushes through, now look, easy come, easy go. This big move we saw down could easily evaporate, and now you've got that range magnet waiting above. Okay, so we got to really, again, this one probably not as much yet because the S&P and the NASDAQ have that rotation off the low. But I'll tell you, this could easily be the case here. We could, again, obviously we're not, at this point, there's no signs of a short squeeze right now, but the situation we're in, though, combined with the other marks we've seen tonight, really set things up here for a possible short squeeze. But again, it's a bear market, right? We know that bears are going to want to come in. They're going to want to come in, defend that high, and push it back down again. Simple as that. Okay, that's one very, really big clue here. And then again, there's one here too, is that new trading range. We may go into a range here. We get the inventory report tomorrow at 10:30, get the weekly oil report tomorrow at 10:30. So we may end up kind of going into a range here. Ranges, of course, are very important because we talked quite a bit about this stuff already here tonight. The most important thing, though, would be if we do see a trading range, is watching for what? Watching for that rotation lower and that rotation back higher again, right? That's always kind of the trap on these ranges. If we see the bears come in and hold that high and then push it below that low and then we rip back higher again, this is the same situation now we got in the S&P, the NASDAQ, right? Where the bears have to come in, they've got to sell it off that high, or else we'll get that snap, right, and that squeeze going higher here as well. So a lot of this will be very similar here on the crude oil as it was on the S&P and the NASDAQ. The bears right now pretty much have mission accomplished. There's no unfinished business right now for these bears. I have to think above this area is where bears will be coming in. We don't have any rising support because we have a lower low on that price. So as we go higher here, my job is very, very simple. Trap in those buyers, right? Again, try to get above these areas here. Trap in those buyers, use those stop losses for that gas, right? Running right back down into that trading range and ultimately back down to retest that low. Okay, now as we go higher here, well, and just kind of finish my thought here, if we do end up back down at that low now, again, this will pretty much be a trading range at that point. There'll be a trend line coming down off that low, and this is exactly where we go with the one, right? The moving average comes over again. right? It's bearish, of course. We want to be careful being a buyer on this. We wait for signs of exhaustion, and we use those stops as fuel, right? So it's really it's all about trapping in the other side of the market at key levels of resistance, key levels of support, and using what could potentially be a trading range here as a magnet right in the middle, right? Or if we do pop up, maybe these buyers come in and they say, no, we're going to go back to that 99 again, and they hold that pullback and they jump off that moving average. That is a short squeeze. That is a reversal. At that point now, we mark off that high, we mark off that low, we find our prior swings, and you guys get it, right? We're looking for any of the entry patterns, those failures, those pullbacks, those traps, all the setups to talk about in that free course linked up in the upper right-hand corner, right? Remember also too, right? First leg, third leg. This one's kind of easy because we can see that trading range up there, 98.5, 98.65, things like that. That'll be our big magnet as we go higher here. Or maybe it's a pop and the bears walk away and now we get a grinder, right? We can grind and grind and grind. That point now, those are easy. Mark off those highs, right? Mark off that low. Find those prior swings, right? And get underneath the prior swing if possible. If not, look to get underneath the moving average, trap in those bears who are trying to sell this thing short, and use those stops as a catalyst for that trap, failure, pullback combo, trying to hit back up that $99 high here from earlier on here today. Strong move up, right? Really strong move higher, shallow pullback, higher high in price, traps, baby, same thing, right? Same thing as we go higher there. Okay, so all of those setups are very similar to the S&P as well. Or we go up, the bears come in and they pummel it lower, right? We take out that moving average and we blast going right through that low. Where are we going next? Looks like 93. Looks like 93 is our next big objective. This obviously oil likes to go $5, right? So we're at 95 here right now. If things begin to tumble tomorrow, think about again, 93 is an easy one, but think about 90. 90 is the next big round number if things really begin to really crack here tomorrow on the price of oil, which remember, if we see some bad earnings, if something happens with the FOMC tomorrow, demand for oil or perception of demand for oil, right, may really tumble and then may cause for a big sell-off as well. Right now, we're very much simply guessing at this point. We're waiting for more data as we go. But watch as we go up, that move lower. Watch those bears coming over, holding that pullback and jumping, going lower. That'll be your sign for a 1, 2, 3 breakout, finding that channel, finding that first test off the high of that channel. As discussed many times already, that first leg, that third leg will help you give, right? Can help you give a fine tuning to that final exit target, right? Or there's one more possible scenario here, and that may be it may keep kind of grinding down almost a channel here, right? So one more possible scenario is this, where we may end up kind of grinding down with what would be basically a spike in channel. If we end up grinding down in a spike in channel like this, doesn't look like that's the case right now on the S&P, the NASDAQ, but if we do end up grinding down like this, remember that first pullback, basically take that channel and right where it lines up with that spike down, right? So right where that channel kind of intersects with that leg down, that area between that level right there and that first kind of pullback high right there, that becomes our sell zone. And at that point now, if they keep holding this thing down like this, now we wait for that pop up. And like I always do, I try to find the way to trap in those buyers, right? As the buyers come in, we can use those stops for a failure into a pullback combination. And then where do the bears want to go? They want to go right back to retest that low. That's the objective, to get it. And then from there, we'll see what we get from there. But keep your eyes on that too, right? Because, again, there may not be a range here. I'm just simply speculating right now because we have ranges on the S&P and the NASDAQ as well. So if it keeps on grinding down, right, that becomes, again, it becomes a spike into a channel. And then think about where the base of that channel is right there. And the first pullback, that becomes your sell zone. And then you want to sell inside that sell zone. And again, we're not simply guessing, for the short, right? I was always taught, one of my first mentors in the business said, the easiest money you're ever going to make is when you are selling and buyers are caught are caught long. Their stops become an easy way to get a quick first target, get rid of all the risk, and then hold on to see how much money you can make off of that trade. So keep that on your radar for tomorrow. This obviously may be a bit steeper than that as well, but that's something to consider here tomorrow as well. All right, now speaking of tomorrow, the easy stuff is done. We've now planned our trade tonight on the oil, on the S&P, the NASDAQ. I would love to get some squeezes here for us here tomorrow, but you know how we do it. We'll take whatever the market gives us. Don't forget, though, tomorrow morning, 8 o'clock Eastern Time, it's a great place to learn and trade along every morning in our trade room. If you're missing too many good trades or if you're taking too many losses, making too many mental mistakes, what are you waiting for? You're going to love my trade room. It is designed to help my traders succeed. I have all the templates, all the worksheets, and of course, you'll have me there helping you out every step of the process. I'll put the free course links, all the membership links. I'll put all that stuff in the description of the YouTube video. Don't be afraid to call the office. I can easily help answer questions on the phone or via live chat on the lower right-hand corner. So if you guys need help, I'm here to help out. You can always drop questions, of course, too, in the comment section below. All right, guys. Hope you learned a bunch here tonight. Hope you use it to make a bunch tomorrow on FOMC day. Will we get a squeeze? Will it keep going lower? We don't know. But we're ready for it, though, no matter what happens, aren't we? All right, guys. I'm out of here for now. I will see you guys tomorrow morning at the opening bell. If not, we'll come back and we'll do it again tomorrow night, same time, same place. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.